All right, I've been struggling tremendously with my microphone. I'm going to see if this is any better. I'm going to try not to move around too much because I think that the connection at my computer is a little dodgy, so I'm going to try not to move my head too much to try and keep the volume level stable. So let's go. We're going to just do again, like we did in class, task 3.39 and 3.40, and I think we'll also do 3.41. So let's do 3.39 first. You are provided with figures extracted from the financial statements of RS Limited. No fixed assets were sold during the year. What do we have to do? We must show equipment purchased and additional amount invested in the fixed deposit during the year. So we do not have to show any disposals of assets. So what the part of the cash flow statement that we're doing now is cash flow effects of investing activities. That is money, stuff that we invest money into, like new equipment, new vehicles, fixed deposits. And that's not just increases in fixed deposits and vehicles and land and buildings and stuff. It's also decreases if we sell it, or if a fixed deposit matures. So it says here that no fixed assets were sold during the year, so that's nice. Let's start with the easy one. Fixed deposit. Did fixed deposit go up or down? As we can see, it went up from 100 to 140,000. That means that we took cash out of our bank account and put it into our fixed deposit account, which means we had a cash outflow of 40,000. Right? Cash outflow, 40,000. Now if we go to the marking guidelines for 3.39, there we have in our fixed deposit, there was the value at the end was 140, value at the beginning 100, so we had a cash outflow or an increase in fixed deposit of 40,000. It's not in brackets here because this is not an extract from the from the cash flow statement. If it was an extract from the cash flow statements, it would say there would be a line item saying changes in fixed deposit, and in the little box on the right, in brackets, it would say 40,000 because we had a decrease in cash, or we had an outflow of cash due to that increase in our fixed deposit. All right, let's go back. Now it says we also have to calculate equipment purchased. Now how do we calculate that? Well, what we're given is book value at the end of the year, book value at the beginning of the year. We're also given depreciation. Now we know that in our note 3 to the balance sheet, that is our fixed assets note, we see book value at the beginning, we see book value at the end, and we have movements in the middle, including disposals, purchases, depreciation. Now there are no disposals in this one, nothing. But there is depreciation of, how much was it? 298,600. There it is. So we can calculate it by working backwards. We can say book value at the end plus depreciation minus your value at the beginning, and that will give you your purchased amount. So if we look here, we've got book value at the end. If we had gone from top down, we would have said book value at the beginning minus depreciation plus equipment purchased equals book value at the end. Now we don't have this one here, so we've got to work backwards. Let me just erase this. I'm drawing too much on here. If we were to work backwards, we'd say 720,000. Instead of minus, we're going to plus the depreciation amount. Instead of plussing, we're going to minus book value at the beginning of the year. And the difference between those, the answer there will be your equipment purchased during the year, 356,600. So in our cash flow statement, under cash flow effects of investing activities, we would have purchase of fixed assets. Purchase of fixed assets. And because it's a purchase of assets, it's it's an outflow of cash, and therefore it will be in brackets, 356,600. All right. Now so that's task 3.39 done. All they wanted us to do was calculate this figure. Oh, my bad. I'm trying to draw with the mouse there. They wanted us only to calculate this figure and this figure, which we have done. Now let's go to 3.40. Task 3.40 says, calculate the cost of vehicles purchased, again, and calculate the amount invested in the fixed deposit during the year, again. Let's do the fixed deposit first, because that's easy. At the beginning of the year it was 290. At the end of the year it was 360. So we had an increase of 70,000, which means that in the cash flow statement it would be in brackets, because it's showing an outflow of cash out of our bank account and into the fixed deposit account, because the fixed deposit account increased. So we invested some of our cash into the fixed deposit. It's an outflow of cash. And let's see that in the answer. There it is. There's the 70,000 that we were looking for. Now let's do the let's figure out the cost of the vehicles purchased. Well, remember what we said earlier. Balance at book value at beginning minus depreciation minus disposals at carrying value plus book value, plus purchases of new fixed assets equals book value at end of the year. So book value, this is book value beginning, this is book value end. Okay, so we've got this, these things, we've got some of this information, but not all of it. It does say that vehicles were sold at a book value of 860,000 during the year. So we've got this figure here. Disposals at carrying value, 860,000. Do we have depreciation? Yes, we do. 210,000. So we have that one too. Do we have book value at the beginning? Yes, we do. 440,000. So we've got that one. Do we have book value at the end of the year? Yes, we do. And so we've got all the figures we need to work out this last one, this purchases figure, the purchased amount. So it will be, you would work backwards, and you'd say book value at end. Instead of minusing, because you're working backwards, you will plus the disposals, plus depreciation, and minus book value at the beginning. So that'll be 695,000 plus 210,000 plus 860,000 minus 440,000, and your answer would be, let's see what it would be, 1,325,000. There's that one figure we were missing. And that is task 3.40. Now let's do task 3.41. For task 3.41, what do we have to do? It says 3.41.1, calculate the fixed assets purchased, again, and again the changes in fixed deposit. Any interesting information? Yes, equipment was sold during the year, book value of 15,000. let's first do the easy thing. Change in fixed deposit. 100 and actually, hold on, let me just check that I still have sound here. Yes, it looks like I do. So fixed deposit at the beginning of the year was 150,000. At the end of the year, it was 105,000, which means we had a portion of the fixed deposit mature, which means it entered into our bank account and out of the fixed deposit account. So that means our cash flow into our bank account during this year was 45,000. It won't be in brackets in the cash flow statement because it's an inflow of cash. Now let's do the fixed assets purchased. Now, does it say that we sold any land and buildings? No, it only says that equipment was sold. So the land and buildings shows an increase of 600,000. Increase of 600,000 means a cash outflow. So in the cash flow statements, it would be an outflow. We had equipment sold at a book value of 15,000. We have our opening balance, closing balance, book value of sold, and depreciation. The only thing we're missing is the additions. So we work backwards again. The balance at the end of the year, this one here, plus depreciation, plus the disposal, minus the balance at the beginning, and that will give us the amount of equipment that we purchased. Now it's asking us to work out fixed assets purchased, not just equipment. So we would have to take whatever that figure is that we worked out for equipment that was purchased, and we'd have to add it to the land and buildings that was purchased, which we worked out was 600,000. That then would be the total fixed assets purchased. Let's go to the marking guidelines, the model answer, and take a look. So we've got for the equipment, book value at end plus the disposed stuff plus the depreciation minus book value at beginning, which gives us equipment purchased during the year of 106,000. In the land and buildings section, we have the 600,000. Oh, hold on. Oh yeah. We've got 2,100,000 minus the 1,500,000. We purchased 600,000 during the year. We worked that one out already. If you add together the land and buildings amount that we purchased and the equipment that we purchased, we have 706,000 Rand of new assets purchased. So in the cash flow statement, that would be in brackets. It would be a cash outflow of 706,000 Rand. Under the line item would be purchase of fixed assets. Okay, and that is 3.4, 3.4, 3.39, 3.40, and 3.41 done. 3.42 is a complete cash flow statement, which we'll do next.